It's great to be joined by our excellent Finance Minister Nicola Willis and also the Chair of the Finance and Expenditure Committee, Cam Brewer. At the heart of this government's Going for Growth agenda is a very clear commitment to lifting economic productivity and to improving long-term economic outcomes for all New Zealanders. A key pillar in that agenda is, of course, strengthening competition settings across the economy, because the markets face real competition, and when they do, Kiwis win through better services, lower costs and more innovation. And nowhere is this more important than in our banking sector, where competition must be strong and the playing field level. Over the past year, we've seen some welcome shifts in monetary policy, with the Reserve Bank beginning to lower interest rates, which is supporting business investment and also relieving pressure on households with mortgages. The good news is that for households with a $500,000 25-year mortgage, they can save already up to $330 a fortnight based on those cuts. That's more money to spend and save as people wish. More Kiwis, of course, will feel that extra money in their pockets soon, as 41% of Kiwis with mortgages are due to refinance at these lower rates over the next 6 months. But the government has also been taking a hard look, as you know, at how the sector is functioning, because we want the banking system that operates in the best interests of customers, not just shareholders. The recent New Zealand Commerce Commission market study into personal banking confirmed what many have suspected for years: high levels of market concentration, low switching rates and limited product differentiation or innovation, which is constraining competition. The report also identified barriers to entry and expansion for smaller and newer players, and these findings make a strong case for targeted reform. At the same time, the Finance and Expenditure Committee inquiry led by Cam Brewer into banking has confirmed much of these findings as well, with its own 19 recommendations. The government, as you know, has already announced it is supportive of Kiwibank raising $500 million of capital to strengthen its ability to compete head-to-head with the major Australian banks. That, of course, will enable $4 billion of business lending and up to $10 billion of household lending, which is a significant competitive impact in this sector. Finally, we remain very committed to a sound and stable financial system, and the Reserve Bank's capital requirements are an essential part of that, ensuring that our banks remain resilient through economic cycles. However, the question has been asked of the RBNZ whether these rules are too conservative and consequently undermining competition and driving up the cost of lending. Therefore, we all welcome today the RBNZ's proposals stemming from their review of capital rules and risk weights, and to share her reflections a little bit more on that, I'll pass over to Nicola. Thank you.
Thank you, Prime Minister. As the Prime Minister highlights, the Government has made significant progress on a number of fronts since coming to office to support enhanced banking competition to the benefit of New Zealanders. Today, the Reserve Bank has released proposals relating to the capital adequacy requirements on banks. And it's important to understand that these in part reflect the direction of the government as through our legislative instrument, the Financial Policy Remit, where we made clear that in protecting financial stability, we also wish the Reserve Bank to do what it can to support both competition and efficiency. It's been of note for several years that commentators have looked at the Reserve Bank's prudential regulations and noted that they are at the conservative end of the spectrum, potentially hindering competition and acting as a headwind to economic growth. In the proposals that have come out today, I just want to highlight a few things. The first is the overall changes which are proposed to capital adequacy, in which the Reserve Bank has proposed 2 different options, would have the overall effect of lowering the cost of borrowing for New Zealanders across the economy. That is significant. They would also, in particular, enhance the ability of what are called Tier 2 financial institutions and Tier 3, that is not the big 4 Aussie banks. They would enhance their ability to compete across a range of lending services. That is significant. The second area that I wish to highlight is the proposal for granular risk weights. And before I lose the room with detailed and technical explanations, granular risk weights go to what the requirements are for particular types of lending. And the proposals that the Reserve Bank have put forward today, in particular, could have the effect of reducing lending rates for the agricultural sector, for community housing providers, where the reduction is estimated to be as much as 0.4 to 0.8%, for some types of residential mortgages and for lending to retail businesses. So that is significant, and again will also have the effect of narrowing the gap between the big four banks and the smaller competing banks. The third thing I wish to highlight is the Reserve Bank's decision published today to lower the entry threshold for those wishing to set themselves up as a bank in New Zealand. Previously, people wishing to enter this market needed $30 million in capital to do so. The Reserve Bank have announced today that from now on that number will be $5 million, which goes a long way to reducing the barriers to more competition in our banking sector. Taken together, the changes which the Reserve Bank are consulting on will have the effect of lowering lending costs and being a support to more economic growth, as well as enhancing competition in the New Zealand banking system, all of which are things that the government welcomes. I also particularly acknowledge the Reserve Bank taking an open, transparent approach to these changes, seeking submissions and feedback on their proposals. This is, of course, one area which was highlighted in the Finance and Expenditure Committee's report into banking competition, which was a wide-ranging report. I want to put on the record my thanks for that work by the Select Committee and the great efforts that the Chair and others went to find bipartisan agreement wherever possible. That's meant that there are some hard-hitting recommendations which in many cases the government is already pursuing. We will formally respond as a Cabinet in the coming weeks, but to give you a sense of the highlights, I'll hand over now to the Chair of the FEC, Cameron Brewer.
Thank you very much, Minister. Ultimately, the banking inquiry was about improving competition, lowering costs for consumers, and making it easier for good new entrants to come into the market. And so you will see a number of recommendations where we define just that. Political consensus was largely achieved. And that was important because if we are to keep the pressure on the banking sector, if all parties, and we had about 3/4 of the recommendations were politically agreed to, then that will make things stick going forward. As the Minister and Prime Minister have suggested and have said, there are a number of things already underway. The capitalisation of Kiwi Bank, which has been given the green light, and through our own legislation, there's a deadline now on making sure that the banking system is up to scratch to enable open banking by the end of this year. And so a lot of these recommendations reinforce what the Commerce Commission recommended 12 months ago, and a lot of those that contributed to the banking inquiry with submissions and the likes, we encourage them now to have their say on the capital requirements. You may have also noted that the banks have been pretty supportive of those capital requirements being reviewed and potentially being changed. So it's all good news from the Chair of the Finance and Expenditure Committee. The banking inquiry is having some early success.
Well done.
Thank you.
Good job. Well, listen, can I say thank you, Cam, for your leadership of that inquiry, and also Nicola for your leadership across a range of finance issues. With that, happy to take your questions.
Prime Minister, these proposals effectively dismantle what Adrian Orr put in place in 2019. You've expressed your own displeasure, or not displeasure, but concern that possibly the bank could be cutting interest rates faster than it has. This is not at the point where you can say that over the last 5 years the Reserve Bank has effectively held back the economy and failed to do its job.
Well, look, again, I respect the independence of the Reserve Bank, and it's ultimately their decisions about monetary policy. What Nicola and I in government control is fiscal policy. As we've talked before, and as you've heard former governors say, you need fiscal and monetary policy to be good mates in order to get inflation under control, to get interest rates down, to get the economy growing. That's what our focus has been about.
Effectively, this combination of policy approaches that the Reserve Bank has taken has held the economy back.
Well, look, I mean, I think you saw a Treasury report, last week, a week before last, which was essentially saying, the actions of the previous government, no doubt about it, made the cost of living crisis worse and put at risk, our fiscal track as we go forward, particularly around debt. We saw a government that was spending a lot. We saw a Reserve Bank that was stimulating a lot. The Reserve Bank then put the brakes on. The previous government kept trying to spend, and that caused a lot of instability in the economy. That's the mess that we've picked up, and we're working our way through. But ultimately, the Reserve Bank independently will make its own decisions around monetary policy. We will have our views around fiscal policy. We'll have good sharing and airing of those respective observations of the economy in our meetings, but it's their decisions.
We've also had 5 years of capital adequacy ratios, which on the analysis of the bank today, given what they appear to be winding it back, are saying, well, those were too tough.
Well, again, you've heard that from a number of commentators and economists over a long period, coming from different perspectives, to say, hey, listen, we worry these capital rules that were put in place are just too conservative and actually driving up the cost of lending. And that's why, we welcome what the Reserve Bank is announcing today, because, for us to be able to make sure that we get risk appropriately assessed sector by sector within the economy. Granular risk assessments are important, so it's not one size fits all. That's actually a much more discretionary risk assessment that's taking place, coupled with capital rules being slightly lessened or loosened as the proposals are from the RBNZ. I think that's all good. It puts downward pressure on the cost of lending, and that's a good thing.
And at what point does giving more perspective on your reckons the Reserve Bank governor become pressuring the Reserve Bank to lower interest rates?
Well, I want to be really clear. The Reserve Bank acts independently of our government and my government. We have regular meetings, Minister of Finance, myself, with the Reserve Bank. At those, we will share our respective observations of what's going on in the economy, and we actually will air those views with each other. That's important that we can do. You would expect us to do that. It's really important that we do that. Occasionally, they're always very constructive, very productive conversations. They'll be robust as we have those conversations, but that is not directing the Reserve Bank. They will act independently, and that's what we expect them to do. And I have to say, irrespective of the governors that I've dealt with in the time that I've been Prime Minister, each and every one of them, it doesn't matter who the Prime Minister is, they know that their job is to act independently of the government. Absolutely.
Can you talk a little bit more about the language that you use? You say that we think that you should lower rates, or it would be good if you could lower rates, or our view is...
Well, we'll air our views. So, as I move around the country, what I'm observing and what I'll play back, for example, is the fact that we've got a two-speed. My observation is it's a two-speed recovery at the moment. We've got parts of New Zealand doing exceptionally well, rural community, primary industries, South Island. We've got other parts that are really challenged. Auckland, as you're seeing, around construction, manufacturing, although that's starting to improve as we're seeing as we go forward from here. So those are the kinds of things that we will talk about and discuss. They will share about their thinking about what they're seeing. The great thing about the Reserve Bank is that they are very data driven and they have very good data. But in the interchange with each other, that exchange, you want that to be certainly very engaging. You want that to be robust at times, and that's exactly what you'd want and what it should be as we discuss monetary and fiscal policy and how it may work together.
You've also signalled a total rethink of the major events fund. Can you give us some more details about what that could look like?
Well,
what specifically could change?
Look, as a government, we're putting in place the right long-term economic plan for New Zealand. And that means things like embracing RMA reform, which has been an issue for a long period of time. It means education reform, as you're seeing, around replacing NCA, investment boost, a whole bunch of initiatives that are actually designed to unlock this economy and to get it moving. And so what we're saying is, consistent with that long-run strategy, we are always up for looking at initiatives that we as a government can put together that can support quality economic activity. What we're not up for is rinky-dink ideas like a cost of living payment and those sorts of things. But you've seen us, for example, come forward with things like investment boost, which is actually encouraging small, medium enterprise businesses to invest in plant capital and equipment. And we know that that's an important thing to do. That's an example of the policy that we're talking about.
That's not quite the major events fund that you're talking about this
So,
morning. So specifically,
yes, sorry.
what are you looking
Yeah,
at?
so with respect to major events, what we're saying is, look, that's something that needs a real rethink, because it actually takes time to build a pipeline of major events for a country like New Zealand. And so we've inherited actually an empty pipeline, so we've got to stuff it with activity. And as I said, I've asked for a total rethink of that, which Louise Upston will lead government through.
And just on that, Auckland Council is set to vote this week on underwriting a fund for the events here up in Auckland so that it can attract major events. And it says if a bed levy isn't approved, Aucklanders could face a rates increase of 0.4%. So would you prefer that the council puts up Aucklanders' rates by 0.4% or effectively?
Well, I just take a step back. We're not going, I've said up front very clearly, we're not looking at a bed tax or a bed levy this term. That's a position of our government. Secondly, I'd say to you that, when you look at Auckland Council, which has actually managed its 3 waters assets and put Watercare into independent structure, that has created $800 million worth of investment opportunity in their own balance sheet. And so there is plenty of money within Auckland Council. They have forever had an events arm, Auckland Unlimited, that have brought events to the city, and they can well and truly do that. So I just reject the narrative that that's exactly how it has to be funded.
Just on the Reserve Bank,
Yes.
you obviously made those comments to the Reserve Bank Governor, but you also shared them publicly this morning. Do you think that dents confidence in the Reserve Bank?
No, not at all. No. I fully, and I said again this morning, I fully respect the independence of the Reserve Bank, and I do. What I was sharing is that we will share our respective observations and views on the economy and what we're respectively seeing, coming at it from slightly different takes, a fiscal sense and also a monetary sense. And those engagements I've always found very productive, very constructive. Occasionally they're robust as we give our different views on things, but equally the Reserve Bank always has insight that I think is incredibly valuable for me to hear their perspective as well, and that's why I appreciate those conversations. But I want to be under no illusions. I do not direct the Reserve Bank. The Reserve Bank independence is sacrosanct, and I just say to you the quality of our governors is they are under no doubt, irrespective of who the Prime Minister of the day has been over the last 30 years, that they don't take direction from a Prime Minister at all.
Do you think they make the wrong call?
Well, I can have my own personal views, which I'll express in a different meeting. But that the bottom line for me is it's more about what we're seeing in the economy. And so, we are seeing huge. If you just look at the rural economy in the last week, you've had Fonterra return $3.2 billion worth of sale back to the farmer community. You've seen global dairy prices go up another 15 cents, and you've had a 25 basis point interest rate cut, and you've got farmer confidence at the highest level it's been in a long, long time, a decade. So, that's all positive stuff. But then it's about talking about the things that we're observing here in, say, Auckland and Wellington. Christchurch is doing well, but you can see that this is a much tougher environment, and it's actually genuinely a 2-speed recovery. So, I'm reflecting my observations of what's going on in the economy in those conversations in the same way they reflect very well and articulate what's called medium-term inflation views and perspectives as well. So, it's a very constructive meeting.
Are you feeling the pressure up here?
In what way?
In respect of the business leaders, council, what kind of pressure on you?
I'm actually feeling. I'm feeling really optimistic about Auckland. I think there's no doubt about it. We had really improving growth at the end of last year. We had strong growth at the beginning of this year. We hit April, and with Liberation Day there was a massive dent to confidence and sentiment in New Zealand, but also all around the world. You would have seen, for example, the German Q2 numbers that came through over the weekend. As a result, we suspect the economy probably contracted a little bit through April, May, June. But what you're seeing, and now we're in growth mode again, and we're growing slightly, and we're expected to grow even more as we go into the 3 months before Christmas. So, and also I'm really excited. Just in the last 7 days, we've had $1 billion commitment from Precinct Properties to do apartment investments here. Yesterday, Chris Bishop and I announced with the Mayor $815 million, 280 extra jobs a year just with level crossing project work that we have. The Ports of Auckland got its wharf extensions through in 6 months. Something that would normally have taken 5 years, $200 million project. And you've got 10 to 12 projects above ground across the CRL as that comes to fruition, taking off. So, we are growing the economy currently, but what we really want to see is all of that bite in. And the last thing I'd say, which I alluded to in my opening remarks, is that you've got 41% of Aucklanders here yet to refix and refinance their mortgages, and they're going to do that over the next 6 months. And when they do, they're going to get money back into their back pocket that they can spend back into this economy. So, we will continually, as we've done around investment boost, as we've done around fast track, continually look at what more we can do, accelerating trade agreements, all of those kinds of things, revisiting our major events funds. We'll do practical things that are aligned with our long-term economic strategy to support Auckland and all of New Zealand. But equally, we're not going to go do rink-a-dink sort of dumb stuff like we saw with cost of living payments to dead people, and $1 billion later, nothing to show for it.
Prime Minister, do you stand by your pledge to lower the bow screening age to 50?
Yes, I do. I mean, our goal ultimately is to match it with Australia. We've lowered it obviously 2 years from 60 to 58. We have to, and we're doing some more intensive screening of Māori Pacifica populations in particular. But the real thing that we have to work hard on is actually giving people access to colonoscopies, and that's that's an access challenge that we've got, and it's really a resource and a capacity challenge that we're trying to build into. So we've got a lot of work underway to make that a reality. That's got to be our vision, to keep lowering bowel screening rates, age rates, and as I said, we've done 2 years already, but we'll keep working hard at it.
And if the pledge was for the screening, and you've only got, maybe 18 months until the end of this term, do you think it's going to be something that will happen?
Well, the commitment is to make sure that we can get ourselves as close to Australia as we possibly can, and that was 50 when I made those remarks. That's very much our goal, and so we've got to keep working hard at it. Yep.
So you think you'll get to the goal before you finish this?
Well, we're doing everything we can to hire more doctors, hire more nurses, to hire more technicians, to get access so that people can get access to those colonoscopies. It will take some time, I don't deny that, but we've made a start. I know it's only 2 years, but the point is we've got to make sure colonoscopies are available to people, and if we can do that, that's how we'll start to be able to have confidence to bring it down even further.
In terms of the screening, what's going to happen between now and the next year to...
Ongoing investment in the workforce to make sure that we can undertake that screening, and also some investment in kit, as you've seen. We've put a huge amount of money into health. We've put almost 17 billion last year, another 7% increase this year, and we've hired 2,100 more nurses. We've hired 600 more doctors into Health New Zealand. So the money is coming in, the workforce is filling. We have challenges in specialist areas, as you know, around colonoscopies, but also in areas of mental health and other areas. And we also have challenges in rural and regional New Zealand, and we've got to work harder at getting the workforce deployed to those places. But I'm encouraged. We're seeing across healthcare in general improvement on our key targets: emergency wait times, immunisation rates for under 2-year-olds, access to first specialist appointments. All of those targets are starting to stabilise and move up, which is great.
Can I just ask some questions on behalf?
Sorry, Amelia, I meant to say welcome back, by the way. It's the first time I've seen you, so it's good to see you.
Sure, right, that's for the sustainability.
Thank you. We appreciate it.
The number of job applicants in the public service has increased almost fourfold since you've been in power. Do you think there may have not been enough alternatives for workers when you did the savings drive in the public service?
Sorry, I don't quite understand the question.
The number of job applicants for available jobs in the public service have increased fourfold since you've been in power. Do you think perhaps there wasn't enough alternatives for people who were looking to the public service to work when you did the savings drive?
I'm not quite sure I understand the question. I think the question, are you saying you're having more people applying for public service jobs?
Were there not enough public jobs available for the people who were laid off?
Well,
Public spending.
yeah, well, look, as I've said before, when you run inflation up and you run interest rates up and you put the economy into recession, the lag effect of that is that you get rising levels of unemployment. And that's been a real challenge, and that's what we've been wrestling with, and that's what we've been peaking our way through right now. And so I fully agree. We've had an increase in people going on to job seeker. We know that unemployment is peaking at the 5.1, 5.3 level about now. But as we look forward, we see an economy that can grow 240,000 jobs over the next 4 years. So that will have been the case in recent times, that it has been a tight employment market, and if that's what you're trying to get to with your question.
And one for you, if I may. From our colleagues in the press, Kip's peanut butter has sold half its business to an Aussie firm, saying even big companies are finding dealing with supermarkets in New Zealand like dealing with a mafia cartel, quote unquote. How much supermarket profit is too much?
Well, look, I've made no secret of the fact that I want to see a more competitive grocery sector in New Zealand, and we have work underway on 3 fronts. The first is around enforcement of the existing requirements, both in terms of the Fair Trading Act and in terms of competition measures. The second is about how we can remove regulatory barriers to make it easier for a new entrant to compete with the existing supermarkets. And the final piece is around exploring potential structural separation. So in terms of PICs and other suppliers that I've spoken with, and I have met with PICs directly, what they tell me is that when you have 2 big giants in the supermarket space, that makes it harder for a small supplier to shop around for a good deal. And what I want to see in New Zealand is that suppliers have a range of options, because when a supplier does well here, they can then go international, and that's how we get the next load of exporters. You know, it's not lost on me that Picks now have their peanut butter on international shelves, and I want to see more small food suppliers able to do that. So the Commerce Commission has ongoing work happening here around the supply code, which is important in terms of setting the rules between the supermarkets and the suppliers. But overall, this is just another reason why we need a more competitive grocery sector.
The Picks has actually asked, when is enough? Are you acting quickly enough on this issue if you're already struggling?
Well, look, this is an issue that is literally 20 or 30 years in the making. We've had ongoing mergers and agglomeration of the supermarket sector to take us where we are today. The last government put forward some reforms which, by and large, suppliers and consumers alike don't think have cut the mustard, which is why our government have picked up the gauntlet, and I will have more to say about that in the coming weeks. I like that as a bit of a disclaimer, as in don't shoot the messenger. Good. Okay, I'm ready for you, Lloyd. I'm ready.
Are you just manifesting a recovery?
Well, I would just say to New Zealanders who are doing it tough right now that you're not alone, that this has been an incredibly tough economic recovery. I think partly because when we came out of COVID, you had that huge inflation spike, interest rates went up, and it felt like that was as bad as it could get. But then down the other side, we've seen that growth has contracted, and it's just been very tough. So many New Zealanders are doing it tough right now. I think part of our job as a government is always to demonstrate that we're taking the steps will ensure that New Zealand does have a better future, and we are collectively confident that we are taking those steps, and we do see a brighter future ahead for New Zealand, for the economy as a whole. Ultimately, it'll be New Zealanders who manifest that, who, when they decide through their judgment that they're ready to invest, hire people and grow, and our job is to set the conditions in which they feel able to do that.
Are those people who are doing it tough that you just spoke of, are they the ones who are the merchants in Israel?
No, not at all. My point was simply, if you go back and look at the transcript, I was asked whether or not the forecasts of growth returning could be relied on. And my point was simply, those are objective, independent forecasts provided by the Reserve Bank. They're not a political view, they're just a data-driven view by an independent economic institution. And while people will have a range of views about the future for the economy, I think it's best to look at independent data rather than listen to political reckons on that matter. So that's my point. My view is that there will be New Zealanders who've been through such a tough time that it's hard for them to see the light at the end of the tunnel, but that doesn't mean that we should resile from our job, which is to keep making sure that we're creating those conditions for economic growth, for job creation, for lower interest rates, for a more affordable cost of living.
Do you find it ironic that when you were campaigning and the heat was coming on you about your tax plans being inflationary and you were confident that Kiwis would perhaps save it, and now you're telling Kiwis to spend?
No, because I didn't tell them to do either of those things. Well, Amelia, that's just incorrect. So in the first instance, we've always been clear that New Zealanders will make their own decisions about whether they wish to save, spend, pay down their mortgage, spend more on groceries, spend more on whatever it is in their life that they wish to do. And the Prime Minister and I were at pains in our press conference last week to emphasise that individual New Zealanders will make their own decisions about what's best for them and their family. That remains the case. Has always been my position. Philosophically, you have to look to the other side of the house to find the people who want to tell New Zealanders what to do with their lives.
Great. Well, listen, can I say thank you much, everybody. Have a good rest of the day. Get inside from the cold and enjoy the rest of the week. Take care.